The losing streak that takes funded accounts away from traders is usually the one they didn't plan for. Most traders believe they know their maximum drawdown. They don't. You backtested your strategy, you looked at a few years of data, you found the worst run of losses you could see. Maybe it was 7 in a row. And somewhere in your head, you decided that's as bad as it gets. That number felt real. You survived it. Your account survived it. So your brain treated it like a boundary. But prop firm rules don't care about boundaries, and markets don't care either. And when that larger losing streak finally shows up, it won't feel like a normal run of losses. It will feel like your system fell apart. And that's when traders make the worst decisions of their careers. They cut risk too early or too late. They override rules. They abandon something that was still mathematically sound. Nothing about the edge changed. You just hit a run of losses worse than the one you'd seen before. And if you never planned for that, you were always closer to the drawdown limit than you realized. And that's the part most traders never account for. So why isn't your backtest the full story? Because you haven't dealt the full deck yet. Imagine you're dealing cards from a standard deck. If you deal 10 cards, you might not see a single king. That doesn't mean there aren't 4 kings in the deck. It just means you haven't dealt enough hands yet. Trading works the same way. When you backtest 2 or 3 years, you're only dealing a small number of hands. You're seeing what showed up early. You're not seeing everything that's still in the deck. And here's the dangerous part. The worst streaks don't have to show up right away. They can sit there, waiting. So the real question isn't, what was my worst losing streak? The real question is, what is still in the deck? Because until you see enough trades, you don't actually know how ugly the sequence can get. And if you size your risk based only on the cards you've already seen, you're assuming the rest of the deck is friendly. And markets are not friendly. So how bad can it really get over a large enough sample size? That's what we need to look at next. So what actually makes this dangerous? It's not just that there are bad cards left in the deck, it's how they show up. Losses don't take turns with wins. They don't space themselves out nicely. You don't get 1 loss, then 1 win, then 1 loss. Sometimes you get 3, then 5, then 8 back to back, and nothing about your system changed. That's the part traders struggle with the most. They think, my win rate is 55%, so I should win more than I lose. And over the long run, that's true. But in the short term, losses can stack, they can cluster. You can turn a profitable system into a brutal month just because the order came out badly. And when you're trading a funded account, the month isn't theoretical because your account doesn't care about long-term averages. It fills the drawdown. It fills every loss stacking on top of the last one. So the real danger isn't your win rate, it's how long a losing streak you can get inside of that win rate. And here's the uncomfortable part. The longer you trade, the more likely it is that you will eventually see a streak worse than the one you tested. Nothing broke. You didn't suddenly forget how to trade. You just ran into a sequence you hadn't experienced yet. So what does that actually look like? Let me show you. This heat map shows the probability of experiencing a losing streak over 1,000 trades. Look at 50%, 55%, look at 60%. These are where most profitable systems sit. Systems traders feel confident trading. Now move across. 3 losses in a row, fine. 5, uncomfortable. Now look at 8, 9, 10. At 55% or 60% over 1,000 trades, there's a very real chance you will hit that. Not maybe, not if something goes wrong. If you trade long enough, it will happen. And this is where people get caught. They hit 8 losses and it feels like the account is slipping through their fingers. The drawdown starts to get close, confidence drops, and pressure rises. But nothing changed. You just ran into the part of the sequence you hadn't seen yet. And if your plan wasn't built to survive that, then it was never built to survive 1,000 trades. So why does this actually happen? How can a system that wins more than it loses still take your funded account from you? It's simple. If your system wins 55% of the time, it loses 45% of the time. That 45% doesn't disappear, it's still there. And sometimes it lines up. Now think about 8 losses in a row. For that to happen, that 45% has to hit 8 times back to back. And when you look at it like that, It sounds rare, and that's where most traders relax. They think, that won't happen to me. But you're not placing 8 trades. You're placing hundreds, thousands, and every trade is another chance for that streak to show up. So something that sounds unlikely on its own becomes very real over time. Nothing broke. You didn't suddenly lose your edge. You just traded long enough to see it. And if your account can't survive the worst streaks in your win rate, sooner or later, it won't survive trading at all. And that's how funded accounts get lost. Not with one big mistake, but in a streak of losses that was always possible, but you just didn't know it.